In the midst of a stock's climax run, the tempo suddenly speeds up, much like the climax of a movie. The action reaches a fever pitch of suspense before finally peaking and reverting to a resolution. This final advance tends to occur after a long move up. It's the high point at the very end of the stock's move. A climax run may also occur as the surrounding bull market enters its final stages. The stock's run may look vertical and it may feel counterintuitive to bow out when it's really starting to skyrocket. But this is when the time has come to curb your emotions of greed or glee. It's time to take your gains and calmly exit the stock. But just because a stock is rapidly moving higher doesn't mean it's for sure a climax top. Over the years, IBD has compiled research-driven, time-proven, objective guidelines on how to spot a climax run on a stock chart. Here to help explain is IBD's head of market research, Justin Nielsen.
When I'm seeing frothy sentiment, stocks that are extended and that kind of action, I do get a little nervous, and it does cause me to, sometimes scale back a little bit, especially if it's something that I have a very large position in. This is where I do think it is important to be looking at those weekly charts as well, to kind of get a sense of where has it come from? How far has it come? On a weekly chart, you can really get a sense of, okay, what is the normal trajectory and trend for a stock? And when does it start to go a little bit more vertical than it typically does? And now the question is, is it kind of getting climactic, or is this early enough in a move still from that last base that you could still see this continue? For example, a lot of times we say, okay, when you're up 20%, 40% in just a few weeks, if it's at the beginning of a move, we look at that as power, right? And that's why we have those green flags to tell you you've got a power from the pivot. But when it happens after a stock has already been moving, then we start saying, okay, that might be something that's a little climactic. Bill O'Neill, the founder of Investors Business Daily, when he was looking for climax top action, he would say 18 weeks before you even start looking for a climax top. Now, there are definitely exceptions where we say, okay, maybe something doesn't qualify as a exact climax top, but it has a lot of the
Hmm.
look of it. So you don't want to just say, oh, it didn't have this one thing, and so I'm not going to do anything, right? You have to look at, again, how does this recover?
Once the stock has been showing a strong uptrend for a long enough period of time, you could start looking for climactic action. Like Justin mentioned, the first key technical characteristic of a climax run is that it generally occurs at least 18 weeks after a breakout from a first or second stage base. Be sure not to call them too early in the rally, though. Make sure you're counting bases as well. When a stock is moved out of a later stage base, the climax run may happen sooner than later. Other clear markings of a climax run include a rapid price run up for 2 or 3 weeks, with usually a 25 to 50% gain during that period. Also, on a daily chart, look for something like 7 up days in 8 sessions or 8 up days over 10 sessions. In addition, you may see a wide trading range within the stock. You'll want to check how extended the stock is from its 200-day line as well. If it's 70 to 100% extended, that makes the stock more ripe for a climax top. Other indicators include seeing a break of an upper channel line or an island top formation. Railroad tracks are another key indicator to look out for. This type of price action occurs over a 2-week period. Sometimes, near a top, a stock will retrace the prior week's large price spread and close the week slightly higher or mostly unchanged from the prior week. Volume is heavy, and yet the stock fails to make much price progress. On a weekly chart, it looks like 2 parallel vertical lines resembling railroad tracks.
Let's go back to 1999, if you will. Go ahead and put, Schwab in at 1999. This came out in 1998. This was a very classic climax top. And look, you can see very early on, very climactic action on this, where it was going at a certain trajectory and then it really shot up. This is where Bill was saying, oh, that was too early. It was too early from that base to really qualify as a climax top, even though it had a lot of the qualifications, even that downside reversal. But if you had kind of said, oh, look, it kind of just held tight afterwards, and then it kept on going, and then you see it kind of had its trajectory, and then it went vertical again. And that was the one that Bill was selling into. At the time, it was I think around 150 because there was a split after this. But if
Yeah.
you went back to that time, he was selling right into that at 150. Some of it on the top day. Let's go ahead and pull up Qualcomm since we're in 1999 because Qualcomm also had what looked like a climax top, but then it did this very sideways action. A lot of folks in the firm, the portfolio managers, were selling into that because look, you had long enough to say, "Oh yeah, we've had a run here. This is a climax top." But afterwards, it held very tight, and then it broke out again. A lot of those same portfolio managers were buying this back, and got a really nice move. I mean, almost 100% move in about 4 weeks. And so again, they were selling into that. And this was one of the first climax tops of 2000. Right at the beginning of the year is when this and it also coincided with like a 4-for-1 split.
Climax runs are fairly rare, but you want to be prepared in the event that your stock is taking off and begins to take on some of these traits. As Justin pointed out, it's not a perfect science, but if you pay attention to these criteria, you'll be ready to take action either way.